Good afternoon, this is Norse and welcome back to the technical analysis channel. Today I got three things on my watch list. One of them has already started, so to say, so that is gold. So I'm watching gold and oil and Euro USD this week. Gold, I'm looking to go long, or just a disclaimer, I'm already long on this commodity. The reason behind this trade is basically this support level back here from the 1st of March. We traded down below it 1st of May, so the first of 2 months, and right now I'm looking for a bounce in gold to go higher. Right now we still haven't printed a higher high, but we do have some higher lows. So this could be the start of something good. So I got a order down at 1304 and I have some at 1309, but I'm hiding all my stops at 1305. So if price trades back down to 1305, I will get taken out and I will have to reassess and maybe re-enter if the setup is still valid. So that is what I'm waiting for right now. And yeah, basically, because I really like this price action that we are seeing in the last few days. But the move higher needs to come very soon, because the longer we stay without breaking to new highs, the lower the probability is for price actually breaking to new highs. So there's a bit of a time stop on this trade as well. So let's see how this week unfolds. And next one up is Brent, so UK oil on TradingView. I have been doing a lot of coverage on oil lately, or the last few months, and there's a very good reason behind it, because in terms of fundamentals, we have the commitment of traders report showing very, very high numbers. We are at an all-time high, and we have the Baker Hughes rig count also creeping up. So when price is breaking to new highs, I always look for a false break to the upside, and the false break itself will be the trigger for me to execute the short. I executed a short trade on oil this morning, or early, well, a few hours ago, after we failed up here. So if you see this first red candle on a 1 hour chart, that is my entry, and it's smaller than usual because right now I'm trying to catch the turning point itself. That is where my edge lies, but the bigger edge that I actually utilize all the time is risk management. So when I trade reversals, if I go away from the very good concept that is risk management, I will blow my account in an hour. So I always focus on the risk before anything else. I don't care about the reward. As long as I take care of the risk, the results and the reward will take care of themselves. But back to the point, if this truly is a false breakout to the upside, we could see a very substantial move to the downside. We can measure out the two last times price had a false breakout, and price moved 3% that time from peak to bottom, and the next time it moved 4.24%. So, and right now you can see there's a lot of annotation on this chart, because I think that price might be in an expanding wedge pattern. And if that is the case, an expanding wedge or a three-drive pattern is a pattern of weakness. And that also makes trading this specific reversal that much harder, because every time, well, the wedge expands and it goes right into the stop loss. So expanding wedges, at least from my own personal history, it has a lot of break-even stop outs. So a very frustrating pattern to trade, but very rewarding when you get them right. And right now we are at the third touch itself, and the key break for me to add into this position and start going towards the 1% risk on this trade. So right now I'm at 0.5% risk on this specific trade. If we break the current low, so the low from this consolidation, close below it, that will lead to me actually executing the rest of the 1% position. And then if price breaks down even further, I will simply use the EMA 50 on this. So that will take a few days to actually materialize. So I have a lot of time to plan and actually decide on whether how to actually go ahead and trade this specific setup. And that is the beauty of trading the higher time frames. You don't have to take a decision on the spot. You can wait a few hours, or you can wait till after dinner. You can do a lot of stuff to make sure that your emotional well-being is stable, so you're not rushing into a decision that could end up costing me a lot of money. So that is the beauty behind the higher time frames, and that is why I like to trade them that much more than the lower time frames. So I just find it easier. So right now, to summarize, I'm short on Brent again, and if price closes below the 75.29 level, I will look to add to this position. I will hide my stop below this recently formed high. If price breaks to a new high, that will mean that I get stopped out. So I'm not willing to hold. So I have an extremely strong conviction that the top in Brent is very near, but I'm not willing to let myself hold on to that belief if price moves higher. So that will just be a regular stop out for me. So that is also very important to keep in mind. So my conviction could stay strong, but I'm not willing to risk my account on my conviction because I'm wrong half of the time. So if I'm holding on to something, that's just a bad way to do business. So on to the last one, that is the Euro USD. Let me see. Here we go. This setup, I like it, but I don't love it, if that makes sense. So right now, you can see the common theme on the Euro USD for the last few months. So we are now hitting a support level. And what I'm doing right now is simply staying neutral. So what I'm looking for right now is if price starts to create some sort of bullish pattern right here, so any kind of bounce right here, that will lead to a green light go on this trade for me. And what I'm looking for is basically if price goes all the way up here, closes, that will trigger me to execute a limit order down at the 119.16 level. Then I will simply look for price to explode to the upside, because if I'm right about this trade and the setup, that will mean that there's a lot of traders trapped below this recent support here. So this is the second time, so this could be a double bottom pattern forming right in front of my eyes. But right now I don't know if the euro will bounce or not. So basically I'm just waiting. So if the market moves to the upside, that will trigger a limit order down at 119.16. I might even move it up to 119.25, depending on how price move and going into certain levels and stuff like that. But to summarize, if there's a decent sized bounce or any signs of a short squeeze, that will lead to me executing a trade, and I will look for, I really like this level right here. Let me just adjust this chart so it gets easier. So 121.40 looks like a great level. So we can just do a hypothetical trade on this as well. Let's say that price actually does move to the upside and triggering a trade for me. And let's say that I get in, and this is the low itself. Getting in here, placing a stop just 10 pips below the previous low, and going for a target all the way up here. So you can see here 61 risk versus reward scenario, and this is the reason why I'm waiting. Because if I wait to see if there's actually a reaction to that level instead of going in blindly, the success rate, it goes through the roof. And as I said in January, my trading goals for 2018 is to have a 15% loss reduction, and this is just a part of how I'm going to get to that 15% risk reduction level. So just waiting more. So this could mean that I have to wait until Wednesday to get a fill or something like that, or I can wait until Wednesday to actually execute the limit order, and the market might just explode to the upside without filling me at all. So that is the risk I'm running with this specific entry strategy. So I run the risk of actually missing out on the trade itself, even though I have waited and been a good boy and just waited and stayed patient and just sitting on my hands. So, but there's a lot of risk in trading, and I don't mind the risk of missing out on a trade, because if you miss one, well, there's always another one coming. So that is the beauty with the markets. So all we have to do is stay patient, stay solvent, and things will take care of themselves. So I really hope you enjoyed it. I haven't posted a lot of stuff in the last few weeks, but I think the markets have been extremely dry, and just take a look on NFP itself. It's just ridiculous. The market hardly moves during the big news events anymore, and it's such a disappointment. So, and I'm just waiting for the right opportunities to strike the market. So the only positions I'm holding right now is Brent and gold, and we will see how they pan out. So I hope you enjoyed this video. I hope you stayed until the end. Make sure to hit the like button, and I'll see you soon. Goodbye.